Hey everyone, welcome to Trade with Rob, brought to you by WealthBuildersHQ.com. Now this is not a standard update, folks. This is a strategy or a system that I've added to our trading for our switchback trade. So let me go ahead and do the disclaimer, get that thing out of the way. As we get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like, anything, make sure it fits your own personal risk profile and risk tolerance. All right, so basically, what's happened? You know, if we go back and look at the S&P 500 as a reference point, on a day like today, as an example, let's say that we had a stock that closed near a fib line. The next day we get this big gap down. All our switchbacks are gone. There's nothing there. We get another gap down here, no switchback opportunity. We close here. We get the gap down here, no switchback. We get the gap all the way up here, no switchback trade. Gap down, well, a little bit down. That one is not too bad, right? We run all the way up here, we gap down, right? Close down here, no switchback. That was okay. We gapped up. You see where I'm going with this? We gap down. We're gapping away too much from our existing lines. So what I did is I went ahead and pulled out some previous trading systems that I had put together. And I'm talking about pulling out stuff from 2008, right? Strategies that I used back then, and started to rework them towards the switchback trade. And this is what I came up with. And I'm calling it a high vol switchback trade, or high volatility switchback trade. So basically what's happening is this. If we take Amgen, right? And I'm not saying that these are perfect setups, but the concept is there. Yesterday, right? And this is, you know, from yesterday's data on this one. On yesterday, we closed right at a fib line. Beautiful. Switchback trade, either direction. I like it to the downside better, but we've got either direction we can take it. And then what happens today? We open up with a gap down, and there's no opportunity to take that trade. It's done. Why? Because we gapped away from that 283.27 level. So what do? What I'm looking for is when we gap away, the ideal scenario is we gap a full line, a little bit more, a little bit less. We get near a full one standard deviation move from one Fibonacci to the next. And I could take the bullish trade if and only if, with where this gap down to, if we moved up, retested and bounced, take the trade off to 277, put my stop just down below. If we failed, we drop down, we move back up to it, and we drop, take the bearish trade off of there with my stop just on the other side of the 277.08 level, okay? So in an ideal world, this would be the right setup. Now you're going to confirm with 5-minute candles or 1-minute candles. You're going to confirm with the intraday time frame, whatever your standard time frame that you use. For me, it's 5s, and I tweak with 1s, right? So you look at Amgen, you look at Valero, VLO. Let's try that again. There she goes. So we didn't quite get the gap we want here, and you'll notice we gapped up and we ran and then pushed up in near that 111.67. Does this one work? Kind of ish. You know, if we looked at a standard switchback would be a 1. Yes, I love it. It's a rank of 1. 1 out of 3 is the best one, right? I love the 1, right? That's perfect. If we look at a switchback such as Amgen, a high volatility switchback trade, right? That would be a 2. I'm not as crazy about the pattern, about the move because of the gap away. If we look at Valero would be a 3. Why? Because we kind of gapped a little bit and then ran, right? I really want to see gusto, not kind of just blah, right? That was kind of blah. Does that mean you can't find a trade in there? No, you may get a quick run up to that 111.67 and a fail. Confluence of the 8 at the fib line, life is good. I would just take it as an aggressive entry and not do as many of them. Let's look at 1 or 2 more. ALV. So ALV, I'm not looking at today, I'm looking at yesterday now, right? So here we had closed near the fib line. This would be considered near a switchback. We gapped up, right? So what could we do? The downside trade is minimal because my 8 moving average is there. So if I got above that 87.47 retested and bounced, and that was on the 16th. Let's just go take a quick look at the 16th and just see what it looks like for kicks and giggles. We got above, we retested, we bounced, right? You manage the trade, there's your double top. You fail, you're out. So you're in this trade at 88. You're out of this trade about 89. What do we get to? Yeah, you're out of this trade about 89, 88 and 3/4. So it's not a big move. Not a big move at all, but you take the move that the market hands you, right? We're not going to be picky about it. So ALV was from yesterday. Again, another nice setup there. And then the last one is ELV. Amgen is the only one symbol that did not have a V in it. That was interesting. Let's try that again. There we go, ELV. So look at today. We closed, yeah, it's kind of a switchback-ish trade from, closing yesterday. We're kind of there, a little bit off maybe, but look what happened. We gapped all the way down here. Well, what am I looking for? Pull back to the 382.71 and bounce, or get above the 400 retest and bounce. If we go look at today on a 5-minute candle on ELV, our 400 is going to be right here. We blew right through it. So you'd go and check your 1 minute and so forth. And if the trade sets up, there's an opportunity. But keep in mind, a standard switchback, I would take as a standard trade. So if you're trading 10 contracts, just to pick a number, that's a full trade. High volatility switchback trade, which would be the rank number 2, right, where it kind of gapped near a fib line, I would do that as an aggressive entry, and I would take it as 4 contracts. And the one that was a number 3, which I think that was ALV. Let's go back to a daily chart. No, it wasn't ALV. What do we got here? Oh, this is still ELV. So on ALV, where we gapped and nope, that still wasn't it. Valero, VLO. Just don't know which one it was. There we go, Valero. We kind of gapped in the middle. It's kind of like a non-momentum trade. If I was going to trade this one, I would do 1 or 2 contracts. That would be my best on it at all. All right, so I wanted to give you another opportunity so when the markets get wild, you still have a secondary or backup trade that you could take advantage of if the switchback pulls away and does not give it to you the way you want. All right. Hey, everybody, have a great rest of your day. I will see you at our next update. Listen, this will be in the members area, right? How do you get in the members area? You register for tradewithrob.com. It's free. You'll get access to our members area, which has 2 videos in it. This one now will be in there, and a 1 hour long, almost 1 hour long, training video on how to trade the switchback trade with no holds barred. Every detail about that trade setup is inside of there. So have a good one. I will see you soon. Bye for now.